Hello traders, Gary Wagner here. It is 11:25 in Honolulu, 5:25 in New York on Thursday, 29th day of May, 2025, and this is the evening report for gold and silver. Gold futures surged nearly 1% in response to a confluence of economic developments that strengthened the precious metals appeal. The rally represents a significant rebound from the lows exhibited during the last couple of weeks, driven primarily by dollar weakness and concerning employment data. The significant driver of the rally in gold today was the lower dollar that was caused by a disappointing employment report. The jobless report exceeded expectations for the wrong reasons. Initial jobless claims for the week ending May 24th rose to 240,000, up from the previous week's 226,000. And it was a weakening U.S. dollar that was the underlying motivating factor for moving gold higher. We're looking at a daily dollar chart. You can see that the dollar opened at 100.404, traded 0.52% lower, closing at 99.364. When we look at daily gains in gold, this is a daily standard candlestick chart of June gold, up $30.20, or a gain of 0.91%. We know that 0.52% was directly related to dollar weakness, which means that the remaining 40% of the 0.91% was traders actively bidding gold prices higher. I draw your attention to the intraday low that came in at 31.5130, an exaggerated low, and the closing price was relatively close to the daily high of $3,280.90. One of the interesting aspects of today's trading range, as I pointed out, was the intraday low, and that came in just above the 50-day simple moving average. That is this green line here, showing you that on a short-term basis that gold is in a fully bullish demeanor. This chart also clearly demonstrates where the current level of support is. Major support at 3,300 is represented by recent closing prices as represented yesterday, and opening prices today above this key area, the 38.2% Fibonacci retracement at 3221, and a 23.6% retracement at 3297. The differential is the long data set starts back in November at 2600 up to the all-time record high, whereas the short data set starts at the lows of 2967 up to the all-time record high. The second thing that we want to talk about is whether or not gold is going into a overbought scenario, which according to the stochastic oscillator is getting into an area that we would genuinely see as concern. That would be 80 and above, but currently both the percent K and percent D are anywhere between 62 and 57, saying that when we compare closing price to recent highest highs and lowest lows, gold is not yet overbought, meaning there is more potential for significant room for gold to run. If that is what happens, what would we look at in terms of resistance areas? We would have to look at this closing price here and the opening price on Tuesday, the closing price on Friday, May the 23rd, at approximately $3,383. That also matches very loosely to these real bodies here. And above that is the all-time record closing price high, which comes in at $34.71. This has been Gary Wagner, wishing you, as always, good trading. We will talk to you tomorrow for the next evening report. Bye-bye.